if the European Central Bank bought out a central bank digital euro, it could decrease economic growth by 34 basis points.
I think it's fair to say, if we're honest with each other, that Europe, the United Kingdom and America's broke.
People are beginning to question, how on earth are the Americans going to pay back the money you've borrowed? This digital form of payment will be instantaneous. But if we lock both of them into a contract and say, okay, well, that's going to be mine, this money's yours, and literally a button gets pressed and completely independent, it moves.
So I have to ask this question, where does it leave the banks in the next 25 years?
Welcome to Talking Markets. I'm Michael Wilson, and this is my old friend of many years. you said it, yeah. David Buik. And I'm very pleased to see we're joined by Jonny Fry this morning. Welcome to our podcast. And this is all about the future of money. So look, I'm looking at your CV, chairman of GemCap, founder of TeamBlockchain. I mean, you are Mr. Digital Currency as far as we're concerned. We've talked a lot in the past about this. Let's talk about the future of money. Just for those who don't know, what exactly are we talking about? What is digital currency?
Well, digital money is akin to programmable money. So a lot of people think that, I have one of these things, sort of mobile phone, and it's digital, and I just send everything digitally. You don't. It's electric. When you have digital money, you change the nature of money, because at the moment, if you put £100 into, one of the high street banks, it's no longer your money. It's their money, and they're trustees of your money. And if you want it back, sometimes you get it back, sometimes you don't. Look what happened with Shears and Lehman. Look what happened with Northern Rock. They suddenly said, no, you can't have your money back. And you might want to try it. Go into your local branch and say, can I have £5,000, please? Assume you've got it in the account. And they're guaranteed to say, oh, hang on, wait, mate, can you come back tomorrow or a couple of days' time? If you're in Holland, at the moment you can spend, I think it's €10,000. That's about to go down to 3,000. In France and Spain, it's illegal to use more than €1,000 in cash for a transaction because it's their money, not yours. Digital money, it goes back, and David, you and I have known each other for far too long, but we've spent all our lives getting rid of bearer instruments. I think of it as a bag of gold.
My first job was cutting Shell Transport and Trading coupons. President to Lloyd's 39 Threadneedle Street for payment.
But that was a bearer instrument. You could take it and they would clip the coupon, pay the interest, and you could swap it with someone else. You didn't have to go through all this myriad of intermediaries. So we have the crazy situation in America. You have something called the DTCC, which was set up because there were literally wheelbarrow loads of paper. So Wall Street would trade Monday, Tuesday, shut Wednesday, and then open up on Thursday and Friday, sort all the paperwork, back open on Monday. Because they couldn't cope with the paperwork, so they basically electrified it all. They didn't digitize it. Once you digitize cash, you can then put conditionality on it. So you can say, I would like these goods and services, you want my cash, we'll swap. And once we've entered into agreement,
it's clean. What you're saying is
clean, it's locked in. But the big difference is that you have one of these, not a dirty finger, a fingerprint. So that means you can track and trace where that money has gone, who's actually received it. So it brings huge amount of transparency, and it means that you can trade like that 24/7. Unlike the moment when most markets don't trade 24/7.
Foreign exchange is just about the only one that does at the moment, and that's not entirely right as well. Can you break down, Jonny, for us the types of digital payments that people can use, whether it's as a retail on a retail basis or whether it's from a corporate basis?
Okay, so at the moment there's three types of digital money. One is a central bank digital currency, or a CBDC. And according to the Bank of International Settlement, you've got about 91% of central banks looking at, do we bring out a central bank digital currency? So this is a digital currency with programmability, backed by the Bank of England, backed by the European Central Bank, backed by whichever bank it may well be. And that'll be in two formats. You'll have a wholesale one for corporations and regulated companies, or you have a retail one where you and I can have it in our pocket and spend it. The trouble is that according to the Copenhagen Economic Institute, if the European Central Bank bought out a central bank digital euro, it could decrease economic growth by 34 basis points. So why would a central bank, the chief regulator in Europe, why would it even consider doing a retail CBDC. And other countries have found similar sort of thing. It'll actually put interest rate up by up to 0.25%. Why? Because if the central bank has all your cash, then how are you as Lloyds, NatWest, BNP, whoever it may be, how are you going to attract the wider audience to give you their money so that you can make loans and for fractional banking? Because you'd be mad to put your money in a commercial bank if you put it all with a central bank.
Going back to just rough basics, so in the good old bad old days when I started in the 60s and 70s and 80s, when they started what we called the interbank market and the euro-dollar market, that is now becoming, I venture to suggest, very much less important with the advent of these new products. Is that right, Jonny?
Yeah, because you've got central bank digital currencies. There's a handful that have done it so far, but there's a number of projects. I think over the next 2 or 3 years, you will definitely see wholesale central bank digital currencies. You then have tokenized deposits, which are deposits as you would understand in a bank. They're deposits. There's a liability because they are someone else's money, but they swap those deposits as they do at the moment. But they're in a tokenized format, again, so you can put conditionality on them, you can program the ability. Where most people listening and watching this, they'll come across something called a stable coin, which is a horrendous name because there's nothing stable about a US dollar stable coin if you live and breathe and spend and earn in dollars or euros. So they should really be called pegged coins. And this is the problem that actually faces the wider community of this, is because all three of these things are actually powered by something called distributed ledger technology or blockchains. And the trouble is that blockchains are synonymous with Bitcoin, with the Silk Road, with Ponzi schemes, and immediately people go, oh, hang on, don't touch that, that's really risky. And then that's compounded by you get some stable coins which aren't backed by anything, they're just backed by a promise to pay. So you have something called USDE, less than a year old. The business itself is worth over £400 million. They've attracted nearly 2.5 billion. And it's meant to be pegged to the US dollar, which is great. The trouble is that whilst that's its investment objective, its investment strategy is selling futures on cryptocurrencies, which is pretty hairy, scary. It's the sort of thing you'd have in a hedge fund. And at the moment it's working and you're getting a yield of up to 20%. So people go, great, so I've got US dollar and I've got 20%, but there's no free lunch, is there? And that strategy could go wrong, and suddenly you could potentially lose some of your money. Meanwhile, you've got someone like Société Générale, their Forge project, which came out as a loyalty scheme for Casino, the French supermarket, and that is a 1-for-1 backed euro. So you put €1 in, you get €1 digital money back. But what it means is that Société Générale cannot go and lend; it can't rehypothecate. So it's now, if it's at the moment with money, it's a trustee. Going forward, in that particular time, they're going to be a custodian. They're looking after your money. And Dave, if you want to actually do a deal with yourself, Michael, you can do a deal on a peer-to-peer basis, an atomic swap.
It's a bit like the old State Street Bank being the custodian for securities on a similar basis. Is that
like
right?
having a safe deposit box.
Sorry, Michael, interrupt.
You talked right at the beginning of all this about the bag of gold. Now that seems to me to sum it all up, because that was when people used to carry around jewellery and gold, because now all money is essentially virtual, isn't it? I mean, you can, they're dots on a bank statement, and if you went to the Bank of England, you're not going to get the notes and all that kind of stuff. What you're talking about is, on top of that, you have something which is outside the supposed control of central banks.
Yes, and
economies as well.
Yep.
Right.
But they'll want a piece of that action eventually, presumably.
Well, they're looking at it, and well, let's take your analogy, going back to bags of gold, because I think that's a really good one, especially sitting here in London. The Venetians, the Medici family, arguably invented letters of credit. They had a bag of gold and said, look, Johnny, is it a good idea for you to hoik all across Europe, get to London, and you're probably going to get mugged along the way? Why don't we give you one of these? It's a bit of paper, and it's a promise to pay you when you get to London. We're going to charge you, but you're going to be safe. They nick that bit of paper, but it's not worth anything to them. Yeah. So you saw the movement away from something tangible, literally sacks of gold, to bits of paper. Mm-hmm. That was back in, what, the 1470s or something, something like that. So this has been around for a long, long time. So effectively they'd invented money, they'd created something out of thin air. It wasn't based on something physical, because the physical manifestation of money actually goes back to, oh blimey, it goes back 1,000 years plus, where you actually had, in the Polynesian islands, and they mined rounds of stone, rune stones. And some of these are massive. And they shipped them 500 kilometers across the Pacific and said, okay, this one's taken a lot of effort and time, this one's worth a lot. This one hasn't taken much time, it's not worth very much. And then what we're going to do, that bit's yours. And that measurement of a stone was a large hog and a canoe. And so this thing got separated all up, and they did it as letters of credit based on the difficulty of mining. And that, funny enough, goes back to things like Bitcoin, because Bitcoin is in theory based on the difficulty of mining, i.e. creating Bitcoin. So in some ways, nothing really changes.
Just let me come in here with an idea, because you and I have spoken in the past about the total debt of the world, which is eye-watering.
Yeah.
And the United States of America is particularly eye-watering since the COVID 34 billion or trillion, whatever it is. And basically, I think it's fair to say, if we're honest with each other, that Europe and the United Kingdom and America's broke.
Yeah.
Do you think this will exacerbate the value and the interest in digital currencies and the movement of money on that basis?
Well, again, history is a very, very powerful teacher. And if we go back in history, you can look at what were the world reserve currencies. Now, on average, they last for about 94 years. And they typically change as a result of economic strife or a war. So the current one is obviously the US dollar. I'm going to ask you for the one before that, David, you should know.
Well, I think it was sterling, wasn't it?
Sterling, and before that, Michael, what was it?
Deutsche Mark.
Nope, it was the French franc. Battle of Waterloo. Before that, it was the Dutch guilder. Before that, it was the Spanish, it's the Portuguese.
I'm afraid your history is rather better than ours.
So the thing is these things last for a period of time, and then they fall away. And typically the reason for it is people lose confidence, they lose faith in what the world reserve currency is. Now at the moment, literally in the last couple of weeks, the Saudis have said, sorry Uncle Sam, we want our gold back.
Yeah.
As have 3 or 4 other countries. So they're saying we want to take it out of Fort Knox and we want to bring it back to somewhere. So Germans did it a few more, 3 or 4 years ago. So my point is that people are beginning to question how on earth are the Americans going to pay back the money you've borrowed. They're even a bit worried, are they going to be able to carry on for paying the interest rate? Because you're right, 34 trillion worth of debt. Because what we saw M1, not the motorway, but money supply, go like that. It was just gently creeping up. And it literally went parabolic. And it went from 3 and a bit trillion to 21 trillion of cash. And this is why inflation is proving to be quite stubborn at the moment. That's why interest rates haven't come down. Now some of that money has tipped over and it's gone into certificates of deposit and it's gone to money market funds. Now that's really important, because you can get in America about 5% in a money market fund. You're lucky to get more than 2 or 3% in the bank. Now the reason money market funds are important is that if you had 10 million pounds, dollars, yen, Swiss franc, you wouldn't manage that yourself as a company. You would bring in a professional treasury manager. Well, rather than paying for a professional treasury manager, you can give it to these money market funds. Now the trouble is in this country it's about 50 billion, so it's not a lot of money. In Europe it's 1.7 trillion. In America it's over 6 trillion. So globally you look at a $9 trillion asset class. So that is about 4 to 5 times the size of the crypto market. Now the reason I mention that is that what we're beginning to see of some of the biggest asset managers in the world, they're tokenizing, they're digitizing their money market funds, which means you can put your money in, you can get your money out, literally like that.
Now, he is very, well, we both are, but particularly David has been banging on for years about how you actually regulate cryptocurrencies. Let me put it another way to you. And again, the mind swirls around these kind of things, but I can think of lots of ways in which central banks, thus governments, actually quite like the idea of cryptocurrency. Let me tell you why. You're going to tell me that they save money, but also you can target where people spend it, can't you?
Yep.
Which ought to make it relatively attractive. Is that likely to happen, do you think?
Well, it already is happening in China, where they were trying to encourage, and they've got over 250 million people using their central bank digital currency. It's not on a blockchain, but it is a digital currency. And they're saying, well, there you go, you can have, and they were giving out at a time like to 50,000 people at a time in different cities and towns in China. So you can have $50 equivalent. You can spend it in these 3 shops. I think one was physical and 2 were online, and you've got 5 days. Use it or lose it. So if you wander around different parts of the country and you look at look in perhaps lower cost communities in terms of blocks of flats, how many satellite dishes do you see? How do they afford to pay £70 a month for Sky and et al? Yet they can't buy fresh veg and fruit because I haven't got any money. Can't heat the house, so I haven't got any money. Yeah, but you can afford to do that. So the trouble is, do we want to start imposing and saying to people, you can spend on this, but you can't spend it on that? That's kind of difficult.
People just can't prioritise, can they, for themselves?
Yeah, but the trouble is, how far do you want control over that? But what you can do is say, okay, you've got £500 a month, okay, what we'll make sure is that you'll always pay your rent, you'll always pay your utilities. So rather than spending all your money, if you like, the first week or two, we'll make sure that we keep back enough money to actually pay some of your utilities. Because in this country we have 1.3 million people that don't have a bank account. Yet 2/3 of them have these things, mobile phones. But because they don't have a bank account, they have to pay as you go. Because they don't have a bank account, they're putting coins in a meter. So they're paying 20 to 30% more for their phones and to heat their homes. If you had digital money on their phone, they could then ring fence out and say, right, 20, 30 pounds, whatever it was on your phone, and 50, 60 pounds or whatever it is to heat your home. That will be ring fenced just to make sure that you don't go cold. So there are, as ever, there's some pros and cons of this programmability.
Yeah.
Crime.
But Mike, one thing, let's not forget, people say, I don't want a digital payment because the government will have control and they'll look at what I'm doing. Well, look what the Canadians did to the truckers. So when the truckers shut the line and said you can't import, export across the US-Canadian border, and they put their trucks all in line, the Canadians actually said, okay, number plate, right, we're going to start hitting the bank accounts and close the bank accounts of those truckers. The governments have knowledge, control and power already. What this does is give you control back of your cash, of your money. So if you wanted to, let's say you didn't trust currencies and you wanted to buy some gold, well, you could go and buy the HSBC gold token, 100% backed by your name against numbered gold bars.
Can I just?
Yeah, do.
All right. So I just about get the idea that it's a safe between him and me, or me and you, and the rest of it. Just take us through the ways in which you can actually invest in the currencies themselves, rather than just talking about the transparency of blockchain and the rest of it. Like, for example, you don't buy a bag of gold, you buy an ETF, don't you, these days? Sort of, yeah. Or you could buy an NFT, but that's another whole sort of okay, so I think you've got to bear in mind is the size of the crypto market compared to other markets. So the crypto market today is about 2.5 trillion, which I know it sounds a lot of money, but it's not even a rounding error. When you look at equities, bonds, funds, real estate, commodities, derivatives, they're 2.2 quadrillion. Now we can't agree with the Americans the number of zeros. And the first time in my career, we're bigger than the Americans, because the Americans think it's 18 noughts, we think it's 24. But David, you must remember when we had this problem with billions and trillions. Yeah.
So we'll sort that out. But my point is that something like the derivatives market, we think, yeah, but why is that relevant to our listeners and viewers? Well, nearly every product you buy and sell, the underlying manufacturer or the shipper will hedge their risk. They'll buy some insurance because they want to ship the good across the world, and they don't want to suddenly find, oh crikey, the cost of shipping has gone up by 20-30%. So they're using derivatives as a form of insurance. And those contracts in the derivatives market, money's changing hands 3 or 4 times a day, variation margin. So that's much, much more interesting than the crypto market per se. So the use of the technology, i.e. blockchains and DLT, is actually much more commercially attractive in areas like that. Or maybe it's buying and selling your house, or maybe it's buying a percentage of your house, or maybe it's your mutual funds. So go back to what I said to you earlier on about the money market funds. We've now seen the biggest asset manager in Europe on Monday. We've seen the biggest asset manager in the world, BlackRock, tokenizing their money market funds. So that means you can now buy and sell 24 hours a day, 7 days a week. Now before you say, well, so what, who wants to do that? Well, Robinhood, the US brokerage, did a little experiment last year, and they found out of market hours, they allowed people to buy and sell, generated $10 billion worth of trade. So clearly people do want to buy and sell. Here we are in the middle of the day, we can't manage our finances, we'll go home this evening and think, yeah, maybe I will go and buy or sell, do something like that. Markets are shut. In the old days, you'd have to wait, phone up your stockbroker, phone up your financial advisor. People don't want to do that. They want to get on here and go,
do it now.
I want to do it now. And I want to have a record, and I want it to be completely transparent. And that's what the regulators want.
Let me ask you another thing. How do we include crime and UK proceeds of Crime Act? Where does that come in terms of the overall
Well, this is where we go back to, unfortunately, the regulators are regulating the technology, not the outcome, not how it's used. So in the UK Proceeds Crime Act, which came out in April, slipped in underneath there, it basically said, if you have a digital asset, the local policeman can turn up with his truncheon and say, I'm taking it, because I think you might have done something wrong. I'm going to take it, and I'm now going to destroy it. Utter nonsense. They won't be able to destroy it unless they're actually dealing with the people who issued it in the first place. But they can actually seize your digital asset. So let's say your digital asset was the BlackRock Money Market Fund, as opposed to David held the BlackRock Money Market Fund through a financial advisor. Your legal rights are impaired, are worse than yours. The underlying asset is exactly the same. So we have law that has been introduced, which is just ridiculous. Now, luckily, we are online to have a change of government, because it's very, very unusual for the government that's introduced a law to go and rescind it. But a new government coming in will say, well, actually, that law wasn't fit for purpose. What we were trying to do was to actually stop cryptocurrencies. We were trying to stop people from money laundering. But why would you use these cryptos when they have a fingerprint? You can track and trace. If I give you a Bitcoin now, be very generous, it's about $70,000, but we can then track back right the way through to when it was first mined. So we can see all the different people that owned it. If I gave you £70 of cash, well, A, you'd struggle to explain where you got it from when you go to the bank to pay it in, or if you go and spend it anywhere, people would say, well, why have you got so much cash? What's going on? So let's assume you could put it in the bank. You've got no idea where it came from. You've got no idea, and no one else has. So that's the advantage of digital money, that you can do this track and trace. But at the moment, we have this ridiculous law whereby you're legally got less protection
than I have,
than David, which is just daft. But on the positive side, if we look at global trade, about I was reading somewhere $24 trillion a year of goods and services moved around the world.
Yeah.
And let's say you're in Pakistan and you can't finance your business unless I give you a letter of credit, unless I actually say, well, I'll pay for it and then you can ship it. Now the trouble is, I don't want to pay for it until you've shipped it,
yeah.
And you don't want to ship it until I paid for it. But if we lock both of them into a contract and say, okay, well, that's going to be mine, this money's yours, and literally a button gets pressed and completely independent, it moves. Now everyone's fairly familiar with that. This digital form of payment will be instantaneous, and it'll be a lot cheaper. But the biggest advantage is we've now turned this contract into a security. So it's now governed by security regulations. So not only do I have the protection of the underlying contract,
right,
I now have the protection that it's governed by security regulations. A little bit like the bills of lading act that we saw last year, where they're turning bills of lading, bits of paper, into tangible securities, which means I can then perhaps sell it to you, Michael, because I said, look, it was $1 million, can you give me 98% of the value, because I actually could do with the cash, I've still made a couple of percent, and you can make the balance.
Yeah.
But the thing is, digitally, by doing a transaction, it improves the risk profile for me as the funder. So that hopefully will help bridge the 5.6 trillion a year gap in trade finance. So you can see how digital payments are going to start being used in that wholesale institution environment, because it's a much more transparent, much safer, and give extra protection.
I wanted to talk a little bit about, there appears to be a fair number of what you call micro factors required to adopt digital banking. I mean, the cost of remittance, cost of global payments. I mean, for foreign exchange market turnover, I think $7 trillion a day, something along that line, of which London, I'm pleased to say, despite everything else, has got 39%, and New York only 19%. Reliance on card payments. How does that actually elaborate a little bit more on how we can get there to those sort of things and what value they are in terms of importance within the whole development? Okay,
so the reason that it's important to highlight the importance of the UK in the foreign exchange market,
yeah,
you're correct, it's about $7 trillion a day of money getting moved all over the place. According to McKinsey, the consulting firm, at the moment there's about $2.6 trillion a year of money generated by making these payments. Not just in the FX market, in total. And that's going to go to 3.2 trillion by 2027. So there's a lot of money in payments, which is why you're seeing literally hundreds of fintech companies all over the world trying to have a slice of that action. Because people keep hold of the money, they don't pay interest whilst they've got the money, all sorts of stuff goes on. You know, I think Visa say that there's 24 ways they make a turn. On your monies. And so if you look at the profitability of Visa and MasterCard on Q1 2024, I think Visa was something like 64% return, MasterCard was about 55% return. compare that to the S&P 500, the 500 biggest, arguably most successful quoted companies in America, they're making about 10.7%. So clearly the payment, now, we all do it. I've come over today on public transport, put my card on there. The trouble is the cost of making that transaction, there's typically, it's between 1% and 6% in this country. In America, it's up to 10% by the time you put the interconnector fees in there. But there's normally a minimum charge of £1 to £2. So if you wanted to make a micropayment, so let's say I don't want the whole book, I don't want to make a subscription to the FT for £30 a month or whatever it may well be. I would like that article. I'll pay you 10p. Now, digital payment can make a 10p payment, and there's no reason why it might be half a p to do the actual transaction. It certainly isn't going to be £2. So digital payments allow that micropayments. But sorry, just go back to the London. We had America and Asia, Asia, America, depending how you're looking at this. And in the middle, from the time zone, was the UK. So what happened is, as the Asian markets were going to bed, they handed over their book to London. London carried on trading and then handed it over to New York. Then overnight, it went back to Asia, and that's how it worked. But digital payments trade 24/7. It doesn't matter whether you're in the Maldives, the Isle of Sheppey, the Isle of Wight.
It's there, isn't it?
It's there trading all the time. So London really, really has to get a grip with this, because otherwise the geographic location is completely irrelevant. So as we start to see more digital payments happening, we're going to have deep liquid markets, but markets they trust. Now, the UK, as you say, unfortunately, we're not great at lots of things. We invent things like rugby and cricket and netball, and we keep losing at those, and football. But the point is about London, or particularly the UK, is we have English and Welsh law, and we have financial services. And those two are seen as the gold standard. 80% of all international trade is carried out by English and Welsh law. So therefore, people, if you're going to have a contract, you want to know that that contract is going to be widely used by all sorts of other areas. The other, possibly the secret weapon that we do have, which hasn't really been used economically for theirs or our benefit, is the Commonwealth. We've got 2.8 billion people. That basically, we have an affiliation with those people, and they crudely use English and Welsh law as their basis. Which means that if we have digital payments based on a common law platform, we've already had the bill of lading, the blockchain bill, which you talked about earlier on. We've already had eminent lawyers like Professor Sarah Green at the Law Commission saying, broadly, digital assets, smart contracts, we don't need to change the law, we recognise them. So we've got the basis now, as opposed to you go to America, the world's most powerful economy, and it's not only between federal and state, it's at county level. You get different changes in rules and regulations and all. So that's why, despite America's technology, the Silicon Valley is the best example, America is not dominating space. This is being very much driven by, I would argue, by places like Hong Kong, Singapore, Switzerland. Europe's desperately trying to sort of punch above the weight. Venezuela, interesting Venezuela, you see. They're actually now using cryptocurrencies as the legal tender.
So I have to ask this question, where does it leave the banks in the next 25 years?
The banks
have
got one, in my opinion, secret weapon, data. If they can mine that data with artificial intelligence, they know more about you than you. Which is quite a worrying thought. So if they can take that data, they really know your spending profile, your credit profile, and therefore they can take more informed decisions than someone who doesn't have your data. Because data is the key thing. And that's why you're seeing these things, wearables, whereby you can actually, in time, you'll be able to monetize your wearable, your watch, what's your health. I want, a middle-aged fat bloke like Jonny. I want to be able to see what's his blood sugar, what's his heartbeat, all that, because we can then design drugs around that, as opposed to at the moment we have to go into clinical trials and bits and pieces. So digital assets also bring out not just equities, bonds, commodities, all the things we've talked about already, but they'll start being able to mine data in the same way that the FANGs, the Facebook, Apple, Netflix, Google, they've made a fortune because they've mined your data. But arguably this is putting the control back with the individuals.
When we first together talked to you, probably 3 or 4 years ago, whenever it was, you came up with a very interesting metaphor, which I stole shamelessly and use all the time, which is quite simply, when you're getting on your aeroplane and you see the jet engine, You may or may not know how it works, but you don't care because it works. It seems to work, seems to get you in the air. And that's really when we ask the question, so what's the future of digital currencies? Because it sounds all really complicated. Your view was, yeah, sure, it is complicated. The mechanics are very complicated. But when it gets to mainstream, we'll be wondering what all the fuss, and you won't need to worry about the nerdishness of it, which I thought was quite
very
a
valid,
good
very
analogy.
poignant.
Yeah.
Yep.
Well, look, blockchain is like an Excel spreadsheet on steroids. That's it. It's just a way of holding information, but in a more secure way that can be more easily shared. So I think what we're going to move towards is what I refer to as the digital bank account. So last week I was lecturing and very interested talking to the Dutch tax revenue inspectors. Why do they want a digital euro? And they were listing all sorts of examples of how they could collect money faster, how they could make payments quicker, they could reduce the number of staff and things like that. But whilst I was in Amsterdam, I bought a beer, and I then had to, instead of getting out my normal debit card, I used one of the challenger banks. You know, the Revoluts, the Tides.
Starlings and those sort of people.
Because they're just cheaper. It's much cheaper for me to use one of those as opposed to my normal debit or credit card. Well, I then come to London the next day and buy myself a coffee. Well, then I'm back into using a normal debit card. Well, that's just crazy. Why can't I have a bank account that says, where are you? Oh, you're spending in pounds, you earn in pounds. Right, you use fiat. Just use normal banking system. Oh, you're now in a foreign country. Right, that one we're going to pay digitally because we can pay it faster and cheaper and cut out all those costs. So we won't have to worry about passwords and strings of memorable words and digital wallets and Look, we're one of the few economies in the world that doesn't have digital identity. But we do. You can't even vote now without your mugshot. You've got to have some proof of who you are. So what we need to do is we need to get this digital identity. I don't want people to know everything about me. I just want to be able to do business with you. And you say, okay, well, I trust you because you're over 18. Or there's been some other verification, zero knowledge proof. You don't need to know all my inside out details, but you just need to know enough that it's okay for us to do business. And so digital identity works very, very much with digital assets. And once you start seeing those coming together with AI, then it'll be seamless. And you won't need to worry about how the jet engine works or, you know, do I put oil in my electric vehicle? Well, of course you don't. But my point is that most people don't know, they don't care. And I don't think they'll care about the actual technology. In the same way, David, you know a lot more about the banking system than I do and how complicated that is.
I wouldn't be too sure about that, but I'll take your point.
But most people don't even think about it. You know, what's faster payments and backs and chaps? Don't care, don't want to know.
But the other thing that really strikes home with me is we look at this situation with the banking system, and you've given a very lucid and erudite explanation of how life will unfold through technology and the rest of it. That still leaves me with the unanswered question, and I think this is incredibly important, is education. And you read Philip Stafford in the FT and a couple of other people, maybe in the Times and Telegraph, but the ignorance in this country, unless you're into specialized magazines, is breathtaking. And something has to give with that, in my opinion. Am I wrong?
I would imagine if you actually went out and asked the general public, this thing is 20 APR. They may well think you've got to pay for it on the 20th of April.
Yeah.
You know, and how long have we had APRs out there? And my point is that most people, they're just not interested when it comes. Look, the two topics you don't talk about in the UK are death and money. We just don't. We just don't like talking about money. So you're now talking about bringing out a new form of money. No, I don't want to touch that. Not interested. Now, I can give you some substance behind that. There was a survey carried out only last week, admittedly in the States, just over 1,000 people, and of the people, and all these people actually own crypto, and said, "Do you know how blockchain works?" 65% didn't know. I'd imagine 80% didn't care.
Sure.
But my point is that yes, in theory, it'd be much better if people could make informed decisions. But let's be honest, people still smoke. I probably drink too much. You know, you probably drive your car too fast. You know, et cetera, et cetera, et cetera. You know, the national lottery tickets, it's a tax on the poor. The odds of winning the lottery are 41 million or 14 million to 1 or something ridiculous.
Yeah.
The chance of winning is just like, it's almost like throwing money away. Yet people still do it. Does that mean they're uneducated? I don't think so.
No.
It's their choice. And I think that's similar with this. I don't think you need to be an expert in this. You know, the level of financial knowledge in many, many countries is lamentable.
But does this not come to your point about the jet engine, because people still get on holiday jets, aren't they? They're not bothered, are they, how it works? It just gets them there. The way to sell this is to say, this is cheap and I can trust you.
Well, I think it's also incumbent on the regulators and the government to say, give people a choice, okay, and if we can automate it, to make sure it's fair for, we've got consumer duty, which is really coming into bite here in the UK. We've had treating your customers fairly for yonks, and it's kind of daft not to, isn't it? Because if you keep ripping off your customers, they're going to go elsewhere. So if we actually have greater automation, say instead of it going through a fairly, a SWIFT transaction, it's £25 to send an email. What's all that about? But it still goes on.
But the fact remains, let's assume that we've got a Labour administration come the 4th of July. We don't know, but let's assume. I suspect if you asked Messrs. Reeves, Reynolds, Siddiqui and Darren Jones about this, they would look at you blankly like you'd come down with the last shower. I'm not blaming them.
No.
But you have to start somewhere, and some government department has to start doing its public relations. This is so exciting and be important for people to say, not put the old ostrich head in the sand saying, let it go away, it's got nothing to do with me. We can't afford that.
But I totally agree, but the good thing is that actually we're seeing this actually happening. So we're seeing some of the biggest asset managers in the world, some of the biggest banks actually using the technology. Talking to someone fairly soon at the FCO only a couple of weeks ago, this is a priority. The technology of blockchain is a priority for us now until the end of the year. We've realised that this can actually give us transparency. It can give us control for the actual investors. So this is a technology which is really, really interesting. But please stop regulating the technology. So the reason I say that is that, so let's say I take a picture of this logo, okay, or I sell you that logo for £1,000, no one cares. I sell you the logo for £10,000, I've got to do KYC and AML. If I did something stupid like take a photo and then do an atomic swap and send it to you, I've just broken the law and could go to prison for 2 years. Why? Because I've stored something and transmitted it on a blockchain or DLT. So what? That's just the technology. But that's the law. So you have to become a virtual asset service provider, a VASP, which I can tell you is a very, very expensive process and very complicated. It shouldn't be. All it is saying I've done money laundering and KYC on you. But that's the technology that we have here at the moment. Now they're hoping to clear up a lot of this confusion in Europe with the advent of MiCA. But even so, you've got regulatory arbitrage going there, and Austria has basically come up with a whole load of recent regulations which makes it much easier to set up in Austria than it would do in some of the other countries. So we're grappling with this, but meanwhile companies, and I'm talking about some of the biggest companies in the world, are actually now embracing this and saying, no, we're going to use the technology and we're going to use this digital form of payment.
We ought to be talking to this man on a regular basis.
We
I
should
think this is a story which is running and
back.
running. Jonny Fry, thank you very much indeed for joining us.
Wonderful, thank you so much.
And elucidating, which a lot of people find very difficult to get their heads around, but we need to talk to you again. That is it from Talking Markets this time around. Au revoir, do join us again.